What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we will cover the S&P 500 ETF, the S&P 500 index, and also the VIX index, which is going to be the volatility on the S&P 500. I will show you guys the correlation between the two and where do I personally see the markets going tomorrow, remainder of the week, and how that's going to affect the volatility in the S&P 500. As always, if you guys do enjoy this video, please make sure to give this video a thumbs up. It really helps out with the channel and recommends this video to other people who might be interested in watching as well. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. So before we jump into the patterns, I do want to quickly address something. Whatever I share with you guys is strictly based on my opinion and my analysis only. This is not financial or investment advice. This is also not a prediction as to what will happen, but instead what could happen if we break out or break down of those key support and resistance levels. But from time to time, you will see the pattern break out or break down of its key support and resistance levels, right? So we can't expect the resistance to reject the pattern every single time. Just because it's done that in the past doesn't mean it's going to continue to do that. So now, that being said, if you guys did watch my market updates from this morning and last night, you had a really good understanding on where those levels were going to be. But the markets essentially rallied close to 1.5% today, and they're up another 20 basis points after hours. So definitely a great bullish day with the markets rallying on tech. So Amazon hitting over $3,000, Tesla over $1,400 after hours, Microsoft, Apple, Netflix all hitting 52-week highs. PayPal was also hitting 52-week highs towards the earlier hours into the trading session, but then it kind of rolled off and then sold off towards the end, essentially driving the Nasdaq to record levels. Now it's up over 21% on the year, and then also driving the S&P 500 to a rally as well. So I also want to go over the VIX index, which is going to be really important moving forward, and I want you guys to understand the correlation between the two and why I personally see a volatility spike in the near future. It's going to be a small one, but there is a chance, there is a small probability that we can see a volatility spike in the near future, and I will go over that pattern as well. But to quickly go over the S&P 500 ETF, we understand that the $300 level as a very clear level of support. The 315 was acting as a really good resistance until more recently when the S&P 500 ETF essentially gapped up today, and then it started trading in between this trend channel. And in my morning update, I essentially mentioned the $318 level as a very clear level of next resistance, and the reason I said that is simply because of the fact that that has previously acted as a really good support. So this old support is now acting as a resistance. So you can see how we touched $317.68 on the day, and then essentially got sold off, got rejected. This old support is now validating its new resistance. If you were to move across the chart, you can see that's essentially where we did gap up all the way to $317.68 and then sold off. And then after hours, we are curling back up and trying to break out of $318, with right now trading at $317.75. If you do see a breakout of $318, it's very clear the next resistance sits at $323. So that can potentially create an upside of close to about 1.5 to 1.6%. But again, there's going to be some choppy trading in this area. We might find a resistance. So now we're going to jump over to the daily chart for the S&P 500 ETF, and we will compare that to the VIX index. This right here is going to be the VIX index, which is essentially the volatility on the S&P 500, and I've created a separate video on both the VIX and the VXM index and how they relate to the S&P 500 and the Nasdaq 100 index. So you're more than welcome to watch that video. I will put a link down in the description below, and I will also link it up on the card so you can watch it up top. But that being said, you can see that earlier in the last week of February, the volatility spike going into March was close to about 324%, and that's essentially when the markets bottomed out, right? So March 18th, that was essentially the timeline when the markets bottomed out. And then as the volatility died down, you guys can see how the markets recovered, and we had this huge bull rally now to almost near all-time highs again. So now in the first week of June, so like going into June 11th, you guys can see this huge spike in volatility for close to 100%, right? So 92%, we saw a spike in VIX. So when the VIX spikes, it's essentially a fear gauge, right? It's a metric that measures market sentiment, right? So when this thing spikes, that essentially means that the S&P 500 is going to drop, because there's an inverse correlation between the two, because again, this is a fear gauge as to how much volatility there is in the S&P 500, and this thing usually spikes during times of financial distress, economic disruptions, so on and so forth. And we saw a minor spike on June 10th, right? So where was the S&P 500 on June 10th going into June 11th? So June 10th to June 11th, this right here, you can see this is June 10th red candle. We were down about 0.5%. And then the next day, we were down close to 6%. So 5.76% drop coming in from June 10th to June 11th. And that's the volatility spike right there. So that's the drop I wanted to highlight of close to about 6.5 to 7% in a matter of 2 days. Now, if you look at the VIX index and where it's trading, today it was actually up close to about 1%. But if I were to bring out the 200-day moving average, it is a moving average which is considered as a very critical level for any stock, any ETF, any commodity, any futures, whatever it is that you're looking at from a technical standpoint. So if I were to bring that out, it's going to be the blue line you guys see on the chart now. And you can see how on June 10th, well, June 5th, we essentially touched that level, right? So the VIX index was at a low point of 23.5. And that's essentially where the 200 moving average was. And that led up to it acting as a support and the VIX jumping close to 100%. So now moving forward, you can see how the volatility died down again. And it's now approaching to its 200 moving average. I do want to mention, it doesn't have to happen. The volatility may not spike. But this is something that we need to consider. And this is something that I'm going to personally make sure that I expect in the markets. Because this can lead up to a volatility spike, hence leading up to a sell-off in the S&P 500. I just want to make sure that you guys understand that the VIX is right at its 200-day moving average, which is the blue line, and today it was actually up close to 1%. And moving forward, there are some analysts who have a target of 35 for the VIX in the near term. If that happens, we're looking at a jump of close to 38%. Not as severe or not as significant as some of those previous jumps we have seen back in earlier February going into March, or even more recently in the first or second week of June, which was close to about 100%. But even a 37 to 38% spike in volatility in the VIX index can lead to some sell-off in the S&P 500. I want to re-emphasize on the fact that it doesn't have to happen. The volatility can very well die down even further and drop below the 200-day moving average, trading below its 20 level, and then that can result in the markets going up even higher. So moving forward, if you go back over to the S&P 500 ETF, you can see how this right here is going to be the range we need to watch. Obviously 318, if you break out of that level, great. The next resistance sits at 323. But just based on previous patterns, the last time we hit $323, the markets essentially sold off all the way down to the $300 level, giving us a sell-off of close to 7%. So that right there was my quick technical breakdown on the S&P 500 ETF. To give you guys a quick recap, again, nothing I say is considered as financial or investment advice. Please make sure to do your own research, your own analysis, your own due diligence before investing in the stock market. And this is just my analysis of where I see the markets going in the near future. So 318, the next resistance we need to watch. The markets are closed. They close at 8 p.m. and we're well past that. We're 7 minutes past 8 o'clock. So the markets did close. We were trading at 317.75. The futures are up close to about 15 basis. The Nasdaq futures are up close to about 40 basis points. So the markets can potentially gap up tomorrow by a small amount, unless of course something changes overnight. But that being said, if you do break out of 318, the markets have room to go as high as 323, giving us a good gain of 1.68%. If we do get rejected at 318, then we're pretty much consolidating within this channel before we either break out, break down, and then if that happens, we have identified those next key support and resistance levels. Keeping an eye on the volatility index, that's something that I want to address and make sure that you are aware of, and I will be keeping an eye. If the volatility does spike, we can see potentially a sell-off in the S&P. I hope you guys enjoyed this video, and if you did, please make sure to give it a thumbs up, subscribe to the channel if you haven't already, hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.